Hey fam, welcome back. So today we're going to be going over Tesla. We're going to be going over Bitcoin as well as the Grayscale trusts and some trades that we made. So with that being said, let's get it. Okay, so a quick touch on the markets. The markets did dump this morning. I can't say with certainty what the news is, but I have seen that the Trump trade tariffs, reciprocal tariffs as they're called now, are potentially becoming a thing again, and the markets didn't like that. So yeah, naturally they pulled back. But truth be told, is it really all that much of a shock? Not really, because usually right around this time, going sometime into March, so I'll have to look up the stats on that, but it's sometime right around now into the end of March, or maybe the beginning to the middle of March, that there is actually a pullback in the markets. So it kind of lines up with seasonality. Like I told you guys before, the most bearish times of the year traditionally for stocks is going to be mainly in September, somewhere between August to October, but mainly September, and then February and March timeframe. And then we usually get a rally in April, May, kind of into the summer doldrums. So it's pretty much on par with what we're seeing right now. But I mean, in all honesty, I'm not really that concerned about it because the NASDAQ basically is pretty much sitting at all-time highs. We have this huge green breakout candle here. We just have to get past the highs. So it's just a question of whether it can break it or not. I think it is going to happen. I think we are going to see a breakout, but we won't know for sure until it's actually confirmed. And we don't really have a whole lot of major news catalysts this week. We have... I believe, if I'm not mistaken, I'll have to go back and look, but I think we have the FOMC minutes this week, so that should be interesting to say the least. And a lot of Fed heads coming out to talk to annoy the markets yet again, because that's what they always seem to do. I'm pretty sure they just said that they weren't going to give any more forward guidance, and yet we have 11 Fed members coming out and talking this week, so I don't know. The Fed seems to really flip-flop a lot. It's interesting. So anyways, so we'll talk about Tesla real quick, and then we'll get into the trades that we made, and then we'll talk about the Grayscale Trust. So Tesla, in my opinion, right now, this is just my opinion, okay? But I think it's in a pretty good spot to potentially pick some up, whether it be Tesla, whether it would be TS. Well, if you're looking for dividends, anything Tesla related like TSLP, TSLY. You also have TSLL. There's probably some other plays that you can do options on, but I mean, it looks relatively cheap to me. We did get the oversold signal. We were thinking we were actually going to wait for TSLL to get down to 10 to 15 bucks, but we said, screw it. We'll just go ahead and buy some. If it goes lower, we'll just buy more because we intend to ultimately own more of TSLL in the future anyways. And at this point, I mean, it is pretty oversold. It had a maximum drawdown of 60%. So as you guys know, the larger the drawdown, the larger the potential upside here. It's just a question of timing. So it does appear that TSLL has recovered somewhat. Again, we haven't gotten a golden cross to confirm the upside yet, but the fact that we had this nice big bounce here right off the bottom of support tells me likely it is looking pretty bullish at this point. Like, for example, this oversold signal here was at a perfect bottom. Like, it marked the absolute bottom, no, but the upside was pretty substantial. It went from about $23 to $31, and I mean, that's a big move. That's $8. If you have 100 shares of these, then that's $80 in profit, not including options premiums. If you have 1,000 shares, that's $800. So pretty decent sized gains there. But again, if you're just looking to position on the way down, this, if you to assume that this would actually go further down, which it could do something like this. Maybe come down to like around 15 and then kind of something like that. We could see something like that. That's always a possibility. Then this, if you're just looking to DCA in or get in at particular points in the market where it looks like it's cheap, then this may be the way to go about it. That's how we're going to do it. So Tesla, TSL, anything Tesla related in my honest opinion, at this point, does actually look quite cheap. And I think it's worth at least looking at. And again, we got the oversold on the daily as well. It wasn't oversold back here, and it also wasn't really oversold back here either on TSL. and yet the upside was absolutely massive on these things. So just something to keep in mind. All right, so let's take a brief look at Bitcoin. Bitcoin looks okay right now. I mean, it's not great by any means. I don't like all these red weekly candles. That kind of is flashing warning signs in my mind that maybe a larger move down is coming. Obviously, not a guarantee. We saw something similar back here, but it kind of mainly just went sideways and down. It didn't necessarily have a huge dump, but still, nonetheless, it does not look great. But as long as we hold this 87,000 to 91,000, I think we're good. It could just hold and then chop sideways and bounce or whatever. That's always a possibility, or just bounce immediately off of the yellow EMA, which does often happen in trading in basically just about any of these assets. Okay, so we're going to go over the recent trades. So we decided to roll out some of the, or sorry, not some, all of the contracts for CLSK on this one. So we had to pay, let's see, we had to pay $4 per contract to close this one out. It's not showing it here for some reason, so I have to go take a look at that maybe on the actual spot chart. But yeah, regardless, cost us $40 to close out the covered calls that we had for a week. So we got $11 per contract. So that's a profit of, I think, about $70. And then we decided to go ahead and roll these out for a month, or not roll them out. So we had to close them and then open up new covered calls for a month. But yeah, basically just $50 per contract for a month. So $500 in options premiums. You can see it right there. And again, we're not doing the weeklies as of right now. So the weekly buy, sells, and dividends. So we're just going to cover this as we make these moves so you guys can see it in real time. And then when the monthlies are going to come out, we'll just lay everything out for you guys so you can see it. Okay, so CLSK down a little bit. Not too concerned about that. Oh, I guess we didn't even have to. We didn't even have to pay $40. Okay, so we paid $30. So yeah, anyways, we got $110 in premiums on this. For whatever reason, it's not showing up here. I don't know why, but we got paid $110 initially for that weekly one, and then paid $30 to get out. So $80 in profit. That's not bad. Plus the $500 in premiums. Okay, so next one here is TSLL. We decided to put on 2 contracts. We were thinking about putting on 5, but again, if it goes lower, we want to make sure that we can catch some of that. So, and a lot of people might say, "Oh, well, you might be catching a falling knife." I mean, you could literally say that about anything that's going down, but I mean, it does look like it's showing some signs of recovery. If you're a bear in these markets, you would say something like that, but obviously there's always a contrarian trade, right? So yeah, $76 in premiums here. Both are the exact same expiration, same strike price. If we don't get the shares and the price goes up, okay, whatever, we collect the premiums. If it does go down, we collect the shares and we still get the premiums, and then we could potentially pick more up on the cheap. Either way, it's a win-win as far as I'm concerned. So this morning we also bought some FEPI. So this was actually by mistake. We were supposed to buy AIPI. We forgot that FEPI was at the top. So whatever the case, it's more income. We bought about 4 shares of FEPI. You can see it right there. Okay, just waiting for this thing to load. So, excuse me. So we decided to put on $10 of each one of these. You guys can see it here: XDTE, SPYI, QQQI, and RDTE. We do plan on getting each one of these to about $50 a month in dividends of passive income. And again, we'll have way more dividend ETF positions than this. It's just kind of putting these in here to know what we're going to focus on next. Now, in terms of trying to position into dividend ETFs exactly at the bottom when they're oversold, we're not going to do that this year. We will do that for the oversold signals. We'll try to do that as much as possible for options trades and position trades, swing trades, things like that. But for dividend paying ETFs, because we have so many different trades on the board, so many different investments. It's too much to keep track of. So we're just going to DCA into the dividend ETFs and maybe get a little bit more aggressive as the prices look cheaper and more affordable. So yeah, anyways, we got XDTE, SPYI, QQQI, and RGTE. We did also buy some AIPI as well. And we haven't covered this in the last few days, so we're going to go ahead and take a look at it now so you can see basically 4 shares today. Let's see what the calendar shows here since the beginning of the week. So we'll go back to the 10th because I can't remember exactly how much of this we covered. So you got 1 share on the 14th, 1 share on the 14th, 0.4 shares on the 13th, 0.4 shares on the 12th, 0.6 shares on the 11th, and then so that pretty much covers that for now. So yep, just continuously, slowly stacking at this point. Crypto is, I still think it's, in my opinion, I do still think there's time to buy and to make money in these markets. The question is the macro going to give way so that we can finally get that massive alt season that we're looking for? That's the question. But we may or may not buy more native crypto before the end of the cycle. I mean, the thing is, we're actually getting quite late in this cycle. So, we have about 10 months tops left before the cycle should be over. And the best time to buy altcoins or anything in crypto is at the bottom of the crypto bear market. And we are well past that point at this point. So definitely something to consider. So anyways, LTCN, you guys can see that we're retesting the bottom of this trend line. Obviously, the fact that we got a little rejection off of this is not great. I'm not saying it's bearish. We'll just have to wait and see. The week hasn't closed yet. But as of right now, the best opportunity is right around that $9 area. I'd still be looking at 54 here as the ultimate target. Could it go much higher? Yes, but we would need to see the Fed funds rate basically drop straight down to the floor. So 490% gain here. Because you got to understand how this works. When money is cheaper to borrow, everybody wants to take on more risk. When it's more expensive to borrow, people want to take on less risk. So if we get the Fed basically slamming the rates down to zero, the dollar index falls off a cliff, yields drop, all that kind of stuff. Life is good, money is cheap. Everybody and their brother is going to want to pile into these, and then the price should theoretically just moonshot straight through the top of the chart up here. And should go absolutely crazy, but time will tell if that's going to happen or not. So $3 on BCHG is the cheapest price at this point. I would still be looking for somewhere between $12.30 to $24 on this one for about 690% gain here. HZEN, so for this one, probably somewhere around $2.70 to right around the current price, around $3 would be maybe the best opportunity to get in as of right now. Targets would still be $8.40 to about $10.50 on this one. It's possible it could just go straight up to those prices pretty quick. Remember, this is crypto. Things can happen in crypto literally out of nowhere. I mean, it's insane. So 295% gain. You guys saw what happened with the quantum stocks and with Bitcoin back in October of last year. I don't think I need to say more about this. So ETCG, I would say probably anywhere between 9 to the current price at 10 is a good area to pick some up. Of course, that's not financial advice. You guys can do what you want to with your money. So 1850 to 20 here for the targets. Potentially about a 2x gain on this one for about 118%. ETH. So yeah, we had a gap down and we're kind of chopping around. Not great. The gap is kind of around 24 to 25. Probably going to get filled at some point. You guys can see this one got filled. I would say probably somewhere between 1850 to maybe the top of the zone, 23 for a potential pick-me-up, and then the target being all the way up at 73. I think that's probably the most likely target. 300% gain. Again, we are in that time frame in which Ethereum should start taking off to the upside at some point in the near future. How long that's going to take, I don't know. So for GBAT, I would say maybe anywhere between 3 to probably somewhere around the bottom of these wicks. So 3 to about 3 to 380, somewhere in there, with the target being the previous all-time highs at 32. for a 940% gain, FILG. So same thing, pretty much right around the bottom of the wicks. So 20 to maybe 25 for pick me up, and then the target being at the all-time highs at 400. And again, you got to understand the reason why the wicks 1,900% gain. The reason why the wicks are such a substantial area to trade is because a lot of traders that are looking to either pick up some of the absolute cheapest prices, also known as snipe trading, or smart money institutions, market makers that are looking to try to scoop up liquidity before sending it in the direction they want it to go, will often create these lower wicks, slightly lower than the previous one, to try to get some liquidity or get a trade in right at those lows before eventually sending it to the upside. In this case, you guys can see it kind of happened right here where we got this wick, right? And then you got another one right here. Didn't quite go as low as the first low, but nonetheless, it did grab some of this liquidity down here and then boom, took off like a rocket. I mean, I literally can't even make this up. It did a 40x essentially. So, I mean, yeah, whoever was trying to get in long there and missed out, sure hate it for you. But that's a real-time example of what this would look like. Okay, so GLIV, very similar thing. You got the wick low, then you got a lower wick low trying to hunt for basically liquidity. Do I think it's going to go lower than this low at 820? I highly doubt it, because again, this is the kind of setup I would expect to see before market makers send this thing to the upside. So, because if this low right here is sweeping the previous low, then theoretically it should be heading up, because they got their liquidity. They stopped out all these guys right here that were going long. Let's say they were going long maybe right here, and then their stop was just right below this low on this candle here. Well, guess what? This wick right here just stopped them out, and then they grab their liquidity, boom, take off to the upside. Would have been very similar to Phil G. So anyways, worst case scenario, $8 on this one. Target would be up here at 80. 850% gain on this one. And, believe it or not, I mean, this happens on both sides of the trade. It's a very common method that smart money uses to get people out of their positions before they send the market in the opposite direction, like in this case. So for shorts, right? So you would have been shorting, let's say, maybe right here on this candle at 55. You put your stop loss. So you see the candle closes here. You put your stop loss right up here at 70. And then the following week, guess what? The price goes up to 84. They take out your short stop loss. You were forced to get out at a loss, and then they slam the market down. Okay, so they basically just stole your liquidity and then boom, sold it off. And the trade that you would have made money on, you missed out on because of the methods that these guys use. So G-Link, pretty much right around the zone. So 64 to 84, potentially a good area to pick some up. 230 for the target. So pretty substantial upside, 250%. GSOL, so we have actually not with a confirmation candle yet, but it does appear that we have actually cracked the $20 area. So yeah, maybe potentially look at this 16. Again, 16 to 22 is what I'm looking at. You can see these wick lows down here. Way back here in 2023, we are kind of testing that area, so maybe that will hold as well. The target I'd be looking for is right around 80 to 115 for about 675% gain. GXLM. So this could potentially be I'm a little hesitant to say this, but this could potentially be a bull flag. If it is, and I mean, it looks pretty textbook to me. I mean, this is exactly what I would expect a flag to look like: a nice big straight shot up and then sideways, followed by continuation. The price here could go as high as $150. I'm not saying that with absolute certainty, but it kind of does look like it. So whether this is accumulation or distribution remains to be seen, but it is still above the EMAs and structures. So 36 here to 40 is still the area I'm looking at, with targets anywhere from roughly about 70 to 96 on this one for about 160% gain. Okay, so next one, Mana. Yeah, this is a little bit more difficult one because we're just chopping right below the structure level. I suspect maybe we might get another retest of the 730 or 750. Keep a lookout for that. Keep in mind the wicks have gone as low as 550. I don't think we'll see something that extreme again, but if it does happen, don't be surprised. 71 or 70 in this case is the target I'd be looking at. So from that potential bottom, if it goes that low, roughly about a 10x move. I mean, assuming that you can get your cost basis that low. So for 845% gain here at Zcash. Very similar, retesting these wick lows. Pretty standard stuff in markets when it comes to smart money tactics. Smart money has a lot of tools in their toolbox. This is just one of them. It's more so the market manipulators. Well, there's that market makers trying to make their money by stopping people out of the trades and sending liquidity in the opposite direction, and they get paid fees for that, or whatever the difference in the price is. Again, I've never been a market maker. I don't know exactly how this works, but I have a pretty good idea of how it works. So 315 here is the level I'd be looking at, with targets going anywhere from 630 all the way up to 1050. Nice broad range there, but still 2 to 3x, so 225% gain. All right, I hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see you all later. Peace.